Welcome to the Valmika Property Investing Podcast, where I, your host, share the key to success in the Australian property investing market. I'm the founder of Valmika Buyers Agency. You can find us at valmikaproperty.com. The contents of this podcast are the personal opinion of your host and are intended for entertainment purposes only. Any financial advice must be obtained from your trusted financial advisor or a qualified professional. In this week's episode on what's happening on the ground, I'm going to speak to you about the big events during the week, and that was with regards to the Reserve Bank's meeting in Sintra, Portugal. Then I'm going to move on to how that affected the tone or the potential tone coming up forward for this week's rate decision with the RBA and the hawkish rhetoric from the central bank's meeting in Sintra, Portugal, together with some statistics that came out from the RBA with regards to inflation. Then lastly, I'm going to speak about how those macro events have actually impacted the property market and some anecdotal evidence from what I've been seeing on the ground as a buyer's agent. So, let's get started. To kick off, let's speak about the actual auction results for the weekend ending the 2nd of July. Please keep in mind that these statistical results aren't 100% reliable. I'm getting them from CoreLogic, but there's a disclaimer saying that they may have missed out a few recordings of auctions that weren't available at the time that these were made. So Sydney, let's start off with New South Wales. So New South Wales is up 2.39% on clearance rates from a week ago. So sitting at 69.22%, with Sydney leading the pack there at 71.21% clearance rate. This is very strong, obviously, compared to last year where it was down at around 52%. Moving on to Victoria. Victoria also had a strong showing this weekend. So for the state, 2.27% up with a 69.1% clearance rate. Melbourne also, leading the pack there at 70.16% clearance rate, also up 2.64% from a week ago. Then looking at some of the other states, so Queensland, 54.84% clearance rate, that's down 3.27%. However, Brisbane was up 4.14% from a week ago with a clearance at 64.29%. Adelaide is the strongest, so that's South Australia. South Australia up almost 5% from a week ago in clearance rates. So that's 82.76% clearance in South Australia, with Adelaide clearance at 81.82% and 3.6% up from a week ago. The Western Australia and Tasmanian results together with Northern Territory, they don't seem to be too reliable, so it's not worth mentioning on this podcast. Right, so what happened during the week from a macro point of view? So some of the major reserve banks, namely the Bank of Japan, Bank of England, the FOMC from America, and the ECB from Europe, gathered in Sintra, Portugal. The overall tone with that meeting was very hawkish, in particular from BOE, FOMC, and ECB. The outlier there was Governor Ueda of the Bank of Japan, where he didn't adopt the hawkish stance. Basically, Bank of Japan has been fighting disinflation for almost 2 decades, so they're content with their over 3% inflation at the moment. So they're not wanting to move on rates just yet. Christine Lagarde from the ECB basically confirmed the hike at the next ECB meeting. The common theme across those 3 major central banks, in particular the Fed, so the FOMC, they were emphasizing the higher wage pressure, those prices being passed on to higher prices in general. So that is a major concern for all those investment banks, and Jerome Powell in particular from the FOMC had suggested the possibility of 2 consecutive hikes in a row. So can't rule that out. So very, very hawkish tone set from those major central banks. Our central bank governor from Australia was not at those meetings, but the hawkish tone there will obviously have some kind of an impact on the decision for this week. If you look at the data that came out during the week, we had the month-on-month inflation update. So this is it's a new, relatively new statistical number. So the headline inflation number had actually dropped lower than expected. So it was expected to drop from 6.8 to 6.1%. However, it came at 5.6%. On the face of that, that looks very promising. It seems that inflation is coming down. However, if you strip out the volatile components of it, such as fuel, fruit and veggies, and travel, which is the core CPI reading, the measure of inflation remains high at 6.5%. So basically, no change there. So inflation is actually still very high in Australia. And on the back of that, there's a few banks calling for a 25-point rate hike next week. So we'll see what happens, but obviously there is a good probability of another hike there with the stubborn inflation in Australia. So what does all this mean for the property market? So if we look at just the ground level observations I've been witnessing, so anecdotally in the market when I've been scouting the market. So if you look at the trend over the last couple of months, so when we had the actual pause initially from the RBA about 2 meetings ago, the market took that as the peak in interest rates, and there was obviously a couple of buyers sitting on the sideline waiting for that. So they kind of rushed to the market to try and take advantage of low property prices. So in particular, blue chip properties in eastern suburbs, North Shore and northern beaches of Sydney experienced an initial surge, sometimes in some areas by as much as 8% from the low. But that sentiment, I'm getting a sense that it has changed a little bit after the surprise hike that we had from the RBA last week. And now with talk of more happening, I would be surprised that sentiment wanes a bit. Doesn't necessarily mean that the market will drop from these levels, but might just maintain these levels. And that seems to be anecdotally the general sense in the market. So we will see if that pans out. However, there's been other metrics that have been also adding to the initial surge that we saw from the bottom that we've had recently in the property prices, and there's still short supply, and that's contributed to that initial uptick in property prices that we've had over the last couple of months. There's been particularly been strong demand for units from younger individuals, obviously through to tax incentives there for first-time home buyers, and that's in units up to the $1 million mark, and I'm talking about the Sydney market for now. From 1 million up to the high 1 million range from the younger side of the market. However, the old demographic we've also seen strong demand from there. So downsizers, people who've sold their bigger homes, older people and who are wanting to downsize. So they've obviously got quite a bit of equity that they had built up over the years in their homes. So they've been able to compete more aggressively for units. So there's been particular strong demand for units. In other areas where we haven't seen that demand is in Central Coast. So the working from home trend seems to have waned off a bit there since after the pandemic. So we saw a strong surge in Central Coast prices. Midway through towards the end of the pandemic. However, that seems to have waned now because there's quite a large drive from what I'm seeing for companies to get workers back into the office. So that draw card of working from home, especially in Central Coast, which is a little bit of a distance from Sydney, is starting to wane off a bit. So property is taking longer to sell in those areas. People are taking more of a wait and see approach than rushing in that area. The other side of the coin as well, to support a possibly not an increase in property prices from here for now, with on the back of the rhetoric with more interest rates. There's also quite a large number of fixed rate mortgages that are maturing towards the end of this year, so around October-ish. So in theory, that should increase the supply of property into the market. So in particular, freestanding homes, which are more expensive tickets, you might see more of those coming online. Units, there's still strong demand from there, so maybe won't drop off as much on the unit side of things. However, this is always a balancing act. So the balancing act is that there's been a huge amount of immigration post the pandemic. So there's pent up demand there. So they'll be playing catch up in immigration, and obviously people that are coming into Australia need a place to live, and there's a short supply of property. So it's a balancing act between negative sentiment from rates, the large number of loans moving from fixed to floating, getting that initial interest rate uptick and increasing mortgage payments, and then that versus the shortage of supply from the immigration statistics. So that's why we think property will probably level off instead of drop down. If it does drop, maybe a little bit, but I mean, time will tell, and I'll keep you posted on what I'm seeing on the ground. Well, I hope you this podcast was valuable and you gained some insights from it. If you need some help from the purchasing of property side of things, please visit my website, valmicaproperty.com, and see if we can help you. Thanks. Speak to you on the next one. Thank you for joining me on this episode of the Valmica Property Investing Podcast. I hope you found our discussion insightful and empowering. If you are interested in finding out more about our services at Valmica Buyers Agency, visit our website at valmicaproperty.com. There you'll discover how we can assist you in making informed decisions and achieving your property goals. See you on the next episode.